So, David, we are looking tonight at AS Bryden. So, AS Bryden is actually launching a takeover bid for CPJ. These are two companies that we have spoken about in the past. AS Bryden was acquired by Seprod, and then CPJ a couple of years ago was the best performing stock on the JSC. So, tell us about, give us the update. What's going on?
So to keep it simple, what has happened is that it was a two-share transaction. So they back in July, I believe it was July 9, CPJ would have, sorry, AS Bryden would have acquired a 48% stake in CPJ, from Mayberry Jamaican Equities, several other shareholders, from Mark and Tom's holding companies as well. So that was the first transaction. That wasn't at $10.50 per share. That was cash. Now, what you had afterwards was a continued transaction whereby they acquired a 30%. Apologies, the first transaction was 44.8%, and then the second transaction was additional 30%. So AS Bryden acquired the remaining 30% of CPJ from Mark and Tom. So they got 75%. However, the second transaction was not necessarily a cash transaction. It was like an asset swap. So it was a share for share transaction. So Mark and Tom surrendered 30% of CPJ to AS Bryden. AS Bryden gave them newly issued AS Bryden shares to make them become shares of AS Bryden. And Mark was appointed to the board of Seprod a couple of weeks ago, and Tom Taylor is going to be appointed to the board of AS Bryden. So quite a little, scenario transaction for the owners. But what's this takeover bid? So for those who don't know and want to appreciate things a little bit better in Jamaica, the JSC's rules are built on the Jamaican Securities Act. So some of the things in the JSC rules is not necessarily the JSC's own rules, it's more so them just referencing the actual Securities Act. So once you get more than 50% of the voting control of a company's particular shares, whichever method it is or way, the takeover offer has to be made to all remaining shareholders of the same class. Now, CPJ only has ordinary shares, so they have to make a takeover offer to the remaining shareholders that own 25%. Now, here's where it gets interesting. So, if the company surpasses the 80% threshold, or less than 100 shareholders own at least 20% of the company, the JSC can delist the company. So, if either two of those conditions are breached by any listed company, not in this kind of transaction alone, the JSC can delist you. So, back in June 2019, after Barita did its, first rights issue, Cornerstone was actually above the 80% threshold. And after they did their second rights issue, they went below the 80% threshold, for Barita at that point in September 2019. So that's really, what happens in a sense. So CPA will make an offer by January 5. Shareholders can take it or reject it. But I expect CPJ to remain listed on the JSC in turn.
So they would still be two separate companies.
Correct. So it's not like you're going to have a consolidation of both businesses, because AS Bryden is really based from Trinidad and CPJ is based here in Jamaica. So both of them, have their place in each market. CPJ is a purveyor, distributor, manufacturer, mainly to the tourism space and some level of retail. But with respect to AS Bryden, they really distribute out of Trinidad. Trinidad representing Guyana, Barbados, and this is their second major transaction or acquisition this year. So that's some good context to point out.
So then you have Seprod owning Bryden and Bryden owning CPJ.
Yeah, quite a nest family.
Well, they're all connected. I mean, I can see, how the synergies would work because they're all in that same industry. So it makes sense if shareholders go for it. Do you think that's likely? You attend these shareholder meetings all the time.
So to give some context, basically, apologies, just you something at the same time when I talk to you, but in a sense, you have the distribution market, right? You have different segments. So you have retail, so your swizzle, your water, your different juices, like as kind of like a regular retail beverage market. Then where CPJ specializes in is in the hospitality market, tourism. So they provide, mixed slushy compositions, to make like your margaritas and so on. They offer, branded meats and so forth. So most of their business, at least 8%, is from the tourism space. The remainder is in the retail space. So, CPJ Retail by Lady Musgrave Road, Drax Hall, at their head office in Montego Bay. So that's to give some context. Now, Separate had always been trying to break into that space, which is what they call the HoReCa, hotels, restaurants, catering. There are different terms and ways to describe the distribution space. But basically, in effect, they've been trying to break in forever. And it's not easy to go into that space, especially with established players. Now, Mark and Tommy, would have wanted to step aside, let somebody else run the business. They got a CEO in 2021 or 2022, I believe. That CEO spent about 4 months, didn't work out. I heard that the reason why CPJ moved to the main market was, to open themselves up to a potential acquisition. That didn't pan out, but now we're seeing AS Bryden become that majority shareholder and integrate them in this massive distribution footprint across the region, because CPJ got part of the Moet Hennessy portfolio recently. AS Bryden also acquired a wine and spirits distributor in Barbados. So I'm just showing that there's a good number of synergies that are coming between all these businesses that are being acquired on this AS Bryden umbrella.
You say all of that, but you don't answer the question. What's likely to happen when shareholders get this proposal? Do you think they're going to go for it?
It depends. And let me say how it depends. It might be the case of a MFS and an innovative energy transaction. What do I mean by that? So basically, in those two transactions, the shares were sold, or I should say, offer was made was like probably extremely below market price. So Siboney's offer price or takeover price was 5 cents versus the market price of $1. So it's technically done to incentivize shareholders to not provide or selling in shares to the new owners because they want to keep the company listed. So we have two reference prices, 8.05, which was the transaction that happened a couple of weeks ago. That's a nominal reference price because it was the share for share transaction. And then you have the $10.50, which was the cash price that was paid back in July. Now, it's likely that you're probably going to see a price below the current market price being offered because, realistically speaking, they don't want to delist the company. And if some persons do surrender their shares, they can always sell those shares back on the market to get below the 8% threshold. So I don't expect CPJ to be delisted.
Okay, well, I think you answered Humble Boss's question. Humble was asking, what if a shareholder is down? And the offer price is less than the shareholder average price, and they want to reject the offer? Well, they have all rights to reject the offer.
You just don't want to submit the documents. As simple as that.